Hey there and good morning everyone. This is Trader Tim from eMiniMind.com and I wanted to do a recap highlighting a couple of trades from the week, Wednesday, Thursday, and this morning. A very tight range-bound week, but when we do have long tails on the daily chart, that typically equates to some decent ranges and trading opportunities throughout the day. So let's jump into trade from Wednesday, and I'll just kind of walk through my thought process and highlight a couple of things. Had some good questions coming in this week, looked at some charts, and broke down some analysis. So Wednesday morning, we opened up, and things started out looking pretty clean on the morning, and it led to a pretty decent morning overall. When I talk about things looking clean, what I'm referring to is the candles themselves, the Heikin-Ashi candlesticks, being in nice, smooth, trending colors. So all green, a little red pullback, and then another string of green. If I move over, scroll to Thursday, you can see how, right off the bat, just looking at the chart, we've got a lot shorter string of colors, a little bit of a pullback, a very short string of green, a very short string of red, a green candle, a couple red candles. So that's much more indicative of a market that lacks direction and lacks follow through. So when you get these tails, red bar, green bar, red bar, green bar, you have a lot more chance of being chopped up and having it being a lot less profitable day. So let's start with Wednesday, and right off the open, backing up here, right off the open we kind of went into a tiny little long that occurred in that 15-minute window. So I don't take any trades in the first 15 minutes. I like to let the market settle out. And then usually around 15 minutes, sometimes at the top of the hour, we'll get some sort of reversal. Or if a reversal is going to happen, it's going to happen, at the top of the hour or at that 15-minute mark. And that's what we had on Wednesday. Started to move higher, and then we reversed and sold off. Not a huge reversal in terms of a huge run up and then a huge run down, but a reversal nonetheless. So what I like to do in that first hour is identify where the trading hours only high to low or low to high is. So in this case, I can draw a high to low trading hours only. We'll pretend that we're just in this first part of the morning. And so in that first 30 minutes, the trading hours only short, high to low, was right about a 24.73. And so noting that, I can look for a short opportunity at 24.73. But if we have a situation where, like on Wednesday, we have a nice tiny little double bottom set up, we can draw then from low to high because the short didn't trade first. It didn't trade yet. This long can then take us up into the short. And if the short fails, well, then we're already in the long setup and we can ride that as long as possible. So to kind of walk through this specific trade, I drew up the short. But then the long, we had a nice little double bottom. We pulled back to the 50, had a little bit of a bounce, rolled over, not really much of a rollover. A 6-tick stop easily encompasses this little tick down, taking a couple ticks of heat on the trade. Then we begin to rally. We break above the swing high. The market pulls back and then breaks out again. That allows me to take my stop from that original -6 and move it up underneath one tick below this swing low. Now we're coming up into that trading hours only short, well, I'm already in the long, so I'm going to try and ride it out as long as possible. If the short ends up trading and we roll over, well, then I'll get stopped out of the long, take my profit, and then I can start taking trades to the short side. Well, in this case, the short failed and we kept moving a little bit higher. And so when a short fails like that, at least temporarily, it can look for opportunities to tighten my stop. And with two contracts, taking one off at the negative 23% target for a small profit, and then trailing the second, either by trailing little swings, there really wasn't much of a pullback after this first pullback down here, so trailing swings on the way up, or trailing each candle's low on the way up, especially if you make a swift move higher, or if you break the 23 and then continue on quickly, it can be advantageous to get a little bit more aggressive with your stop. But my go-to method is to take half off at the negative 23 and then use the second half that I have and trail swings. So in this situation, you can take advantage of a long because the short hadn't traded yet. We hadn't gotten to the short yet, so you can ride the long up into the short. In this case, it went a little bit further and then proceeded to roll over, and then you can start looking for short setups. So that was Wednesday's trade, and the question I get a lot is, well, if I have two setups, if I have a short setup and a long setup, well, how do I know which one to take? And the answer is whichever one trades first, because as in this trade, the long could then take you up into the short. So if we move ahead to Thursday, right off the bat, you could kind of tell it was going to be a little bit of a sketchier day, or a little bit of a range-bound, choppy, just a lot of back and forth. So right in that first 15 minutes, even though I don't take any trades in the first 15 minutes on the 512 here, I like to draw up the setups. And so right off the bat, I see, okay, a couple ticks down, and then all of a sudden, red bar, green bar, red bar, green bar, a lot of back and forth, and kind of draw up some real tiny setups here. Makes a little bit of a move lower, grab the swing low to the swing high, makes a little bit of a move higher, turns around again, makes another move lower. So right off the bat, I'm thinking, okay, there's not much follow through, meaning we're not having short setup after short setup after short setup. We're going one short and then one long and then one short and then one long. So again, in that first 15 minutes, not taking any trades, but drawing those setups up and then looking for a potential reversal or continuation at that 15-minute mark. And on Thursday, we ended up with a continuation, meaning we started opening and moving lower, and then that we sort of continued moving lower 15 minutes in. So drawing up trading hours only, meaning the morning higher low to the low for roughly 30 minutes into the day. That gives you just the trading hours only halfway back. And so that short, as it were, on Thursday, lined up nicely with the previous lows from the morning, only about 15 minutes prior. But a nice little double bottom nonetheless, that was acting as support, then could act as resistance. So looking to take a 71 and then round down, because it's an odd number, so 2471.09, round down, add a tick, or subtract a tick in this case, so a 70.75 would be the short entry, and then looking for that to continue down to its negative 23% target. Now, the context of the morning being a little bit choppier, sort of, back and forth, maybe expecting that we don't get a ton of follow through. but nonetheless going to try and ride it out as long as possible. So as the way it played out, we started with an initial thrust breaking lows, but then the market rallied all the way back up, almost retesting the entry before rolling over and breaking lows again. So if you took the trading hours only short, you had an opportunity to tighten your stop down just a little bit into the money, basically break even on this swing high. If you let the trading hours only setup trade and then drew up the opposing to identify where that failure point is, letting the 61.8 of the long fail, and then take the first short setup after that, drawing from basically the entry down to lows, you get a 69.50. Now a 6-tick stop would keep you in that trade even though it was a little bit dirty, meaning we traded in 5 ticks before rolling over. And then the market came up and retested again, stopping out the short after the trading hours only had traded. And if you took the straight up trading hours only, basically getting stopped out for break even on the trade. So not a lot happening on Thursday, but the important thing to sort of be aware of, whether you're in a trade or you're not, I like to leave the short setup, in this case, drawn up until either we hit the negative 23% target or we fail. So if you get into a situation like this and you draw up the trading hours only short, and then you say, okay, well, I'm gonna pass on the trading hours only short, and I'm gonna take the next setup. So if you were to just delete that and then draw up the short, and then you're riding that out and kind of take 5 ticks of heat, it rolls over, and then you end up getting stopped out. Well, if in the midst of this, let's say you pass on the short, and then you turn around and you try to take long setups in here, and through this whole setup here, you've got a long setup that fails, and then a short setup that fails, and then a long setup that fails. And so to prevent getting chopped up in this kind of environment, it's best to leave the original drawing up and not take any trades, whether it's counter trend or additional trades after a first trade fails, before the negative 23% target gets hit or before the 61.8 fails. And so that can kind of keep you out of some of the chop if you just leave that original drawing up and let it either go to its target or let it fail. So scrolling ahead to this morning, a much better morning right off the bat. Again, looking at the retracements right off the bat, nice and clean. A little double bottom here, pulled back, traded up to and through its target. Another little low to high. Now this guy traded about a minute right before that 15-minute mark. So if you jumped in, you could again ride it to the target. This one ended up going exactly to the target before selling off. But nonetheless, don't feel bad if you passed just because it was just a minute or so before 15. I mean, it's not necessarily a concrete, rigid line, but I like to follow along as closely as possible to those rules and those parameters. Now, a lot of you know that are in the Tuesday room that I also like to look at the 5-minute chart. And actually, before I break down that 5-minute chart, I just want to highlight again that we are sitting at the negative 23% target of the big daily retracement here. And so every time we have gapped up in the last 2 weeks, we have sold off. Gap up, right around the negative 23% target, sold off. Gapped up above the target, sold off, sold off, sold off. This entire week, it's just been, closing lower than we opened. So there's been selling pressure up at highs. So this morning, as I went to the 5-minute chart, same process I used all week, same process I use every morning, waiting that first 15 minutes, drawing the setups on the 512, but identifying, okay, 15 minutes in, we could have a reversal. 30 minutes in, we could have a reversal. Looking for that sort of initial thrust in one direction and expecting maybe a reversal in the other direction. And so this morning, knowing that every time in the last 2 weeks, when we've gotten above the negative 23% target, or right at it, there's been selling pressure. Well, what did we have on the 5-minute chart? A nice, clean, inverted head and shoulders. And so this morning, right about at those highs, where we got the inverted head and shoulders, simply using a sell stop 1 tick below lows to get into a short setup was a great opportunity to short, not at highs, but close to highs, with a strong potential that a short-term reversal would ensue. We've got a topping tail right off the open. The third bar was a topping tail, and then you're not entering a trade until the candle is closed, and then the next candle starts to form. So knowing that we closed an inverted hammer here, had a little bit of a bounce, could put my sell stop 1 tick below that candle, and then once we broke that low, we had a nice 15-20 minutes of selling. And then on the way down, you can just trail your stop 1 tick above each candle's high. And so it took you from a 75.50 down to a 71.75. So a couple of points in that short. And so that's a situation where using the context of the week, trying to get a read on, what's been the pattern over the last couple weeks. Every time we reach a level, every time we reach a resistance level, the same thing can be done, asking yourself those same questions. Well, what happens every time we reach this support level? And so that's how I utilize the 5-minute chart. Very similar in how I take advantage of the first 5-minute candle on gap days. It's that same concept where I'm using a sell stop or a buy stop just outside 1 tick of the candle that I'm looking to enter on. And then that was pretty much it for the morning, going into a very nice triangle, tight triangle pattern here. And so I would expect, into the afternoon, either some sort of sell-off or rally as we get tighter and tighter and tighter, or just a sort of pittering out, and then next week having a little bit larger break. So very tight on this week on its range on the ES. And as I've been saying for the last couple of weeks, August is typically a little bit of a slower, kind of lackluster month. Can be some screwy things that happen. So just remain cautious and try not to overtrade in the month of August. So I hope all of you have a great weekend. You can tune in next week to the live trading, eMoneyMind.com/VIP, and you can get logged in there. If you have questions, my email, tim@eMoneyMind.com. We'll talk to everyone next week. Have a great weekend. Take care, everyone.